anniversary, our 13th anniversary, and we are making it special for our viewers by connecting with Shankar Sharma. And Shankar Sharma has been a great channel friend. He's a personally a good friend of mine, and I must thank him on behalf of everyone from ET Now for being there for our viewers in last 13 years every time when it matters. So Shankar, thank you very much.
Thank you for being a good friend for, I think, a good 2 decades plus. And I wish you guys have spent, I wish your anniversary had occurred at a better time, your 13th one in particular, at a better time than right now. But nevertheless, great to see you guys at 13. I remember when you were born, India was just exiting from the Great Recession, the GFC recession back in 2009, I think, right?
Yes.
And now we are about to enter one. So, you guys have your timing perfectly right. 13th, and you're entering a recession.
I look at it this way, that when we launched, Nifty was at 4,000. That marked the bottom. Hopefully, this anniversary will mark another bottom very soon.
Hopefully, doesn't occur near the top.
But are we in for a recession? Because if we end for a recession, then next couple of years are going to be painful.
It depends on what you define as a recession. If you're talking the US, 100%. It's already in recession. The headline indexes always are going to be lagging the reality on the ground. But I tweeted prior to the sales being reported, very poor sales being reported by the retailers, in the US. Prior to that, a lot of talk that I keep having with people on the ground, they told me that there was a big slowdown in consumer spending. And just like a week after that, the numbers that came out from retailers just knocked the bottom out of the retail stocks. And then, of course, the market really collapsed after that. So US is definitely in recession for sure. Several other parts of the world have been in recession. And, Europe has been in recession for as long as I can remember. India is not heading for a recession, but we are heading for a slowdown. And that, I think we should accept it as part of a global macro problem rather than anything extremely problematic with India. So I think we must accept that there will be a moderation in growth.
Hi Shankar, good to have you on the show as always, and join in today on our special day, up or down markets, wo to chalta rahega. But tell me, I'm just looking at your tweets and very vociferous you, calling everyone losers out there. I know you warned everyone in Jan as to what is coming, but tell me, how can you correct it now? And why is it that you feel that markets right now are looking like 2000?
No, so I said this in January, okay? So, and please, I always say this, between Friday and Monday, a lot can change. So, let's not bring a view of January into relevance today. Of course, what has played out in the last 6 months from the time I wrote that article in your parent publication, Times of India, a lot of what, I was hoping I wouldn't be right, but it has turned out to be, fairly, uncomfortably accurate because, when you've been around a long time, you know the signs. It doesn't matter whether you get it right down to the last week or the month, but broadly in a certain period, a certain situation will occur. And in January, it was very apparent that 2021, which was like an absolutely crazy year in terms of startup funding, in terms of our new age IPOs and retail investors piling into stocks they had no idea about. All of that, that train has to be ending in a wreck. It doesn't take you 35 years to figure it out. Okay, so, and the biggest problem, Aisha, is that, and I say this, in all honesty, that in India, Indian fund managers, Indian investors, Indian HNIs, overall in the context of Indian investors, all categories included, we have no capacity for nuanced and balanced thought. For us, it is always black and white, and there is no zone of gray that can permeate your investment thought. Life is gray. Life is never black and white. And if you told anybody in January, and I did this to a few people, you're going to get shouted down. So it's better to just keep quiet and do what you have to do. But since we as an investor community are unable to accept this, while in the US, people have warned of inflation right from the middle of last year. And it's a more nuanced thinking philosophy that sophisticated investors have in the US, which we must adopt in India if we have to mature in our investment thinking. So where we are today, Ayesha, is very simple. I do believe, and I say this again with the completest clarity at my disposal, that globally we are into a major problem situation. Major, okay? I mean, simply the fact that we've had a 10, 11-year bull market coinciding with your birth, which is a very, very good thing. Not yours personally, but your channels. Uh, you know, that has been a bull market that has defied all logic, imagination, longevity statistics, like 13 long years without a break, without any meaningful correction globally. That was fueled, we know with what. And then when that Ben Johnson was deprived, or now being deprived of the steroids, we know that Ben Johnson can't even finish 100 meters in 20 seconds. That's exactly where this global macro and the global market situation is. But within that, we have India and Indian small caps as our non-steroid driven Carl Lewis's. Okay. So I
Shankar,
think
we are looking for
Usain Bolt.
Usain Bolt. That is the
let's
one. No, no, no. So who's the Usain Bolt now? Carl Lewis, Ben Johnson. Come on, that's like Economic Times birthday party we are talking about.
Yeah, that's true. I mean, he's the poster child of all that was wrong with driven training, right? And our bull market from 2009 has been nothing short of being a Ben Johnson, because on their own economies were hurting, and the Fed and the other central banks just stimulated a lot of these steroids into the system of an average runner and made him into a superstar. But I mean, I used to always wonder, and in all honesty, that how can there be no cost? As an athlete, if you take steroids, either you will get caught out or you will have severe health problems. It cannot be that you will neither get caught out nor will you have any health problems. I used to wonder, this continuous steroid of tapers and QEs and not the taper, but the QEs and obviously the rates going to zero and even negative. How could that not have a cost? But it appeared costless, but it was never costless. The genie was in the bottle. The genie is out of the bottle. That genie is going to trouble us all for the next, I think, a year, maybe 2 years, because the data is clear. If you have had a preceding bull market of 10, 11 years, you will have a succeeding bull market, roughly at least 20, 30% of that preceding bull market period. So if you take a 12-year bull market, 13-year bull market, you could easily be in this pickle for a 2 or 3 year period on a global basis. But within that, I won't call it Usain Bolt. I'll call it Carl Lewis. We have our Indian small caps as Carl Lewis, and I am betting on those.
Would you want to spell it out, Shankar, for our investors out there? Because small caps is a very large pool.
No, so I mean, I'll give you an example. I mean, there's an ice cream company in Ahmedabad, okay, and I'm sure you've eaten that ice cream at some point in your life. I bought the stock about 4 months back. I think it was in maybe 1,000 or 1,100 rupees. Today, it's I think about 18 or 1,900 rupees. So it's not all doom and gloom. I mean, when I look at stocks like this, and I was lucky enough to sort of buy it at the right time, I'm saying that even in this terrible, terrible market situation, if you work hard enough, if you go kicking the tires, looking under the hood of companies across the country, rolling up your sleeves, going underneath the car, because a lot of stuff hidden underneath, you will find 2, maybe 5, maybe 10 such stocks. That's good enough for the next 2 or 3 years. So why should I be bothered about the Sensex or the Nifty? Because I don't own a single stock in those, nor do I have any desire to own them. There are plenty of the stocks of the kind that I mentioned out there. My travel bills have gone up dramatically, particularly to India, but for this same reason, because we are in an overall bear market. For that to turn out well, I have to work a lot harder than if we were in a raging, roaring bull market.
Since our anniversary, so I'll take the liberty of taking that point forward. My ticker is asking me to please ask Shankar Sharma, how do we flash that Shankar Sharma likes ice cream in Ahmedabad? You have to be more specific, right?
How many ice cream brands do you know in Ahmedabad?
I'm not an ice cream guy. Aisha is, so maybe
No,
Aisha.
I'm not. I don't like anything cold.
The last time I ate ice cream was probably like, 10 years back. So I don't eat ice cream. I can buy ice cream.
Shankar, the general view which you've expressed in the past is that markets are all about understanding cycles, and you look at the ticker more than anything else. So, what is the ticker telling you about technology now?
When you say technology,
I'm talking Indian IT companies. The global technology companies, man, they got smoked. So, I don't want to go there also.
no, I think a US recession is definitely not good news for our companies. I mean, for sure. I've been a bull on these companies for the longest period. They're great companies, fantastic managements, but I think they are going to face headwinds given what's going to unfold in the US. And I do believe the US is just at the beginnings of a fairly severe recession, and corporate profits will get squeezed. If you look at the big tech in the US, okay, and allied companies, they have hit a wall in terms of their growth. I mean, they can't grow incrementally much more. If you look at Netflix, if you're looking at India for growth, you were sunk. Facebook, where does it grow? It can't go to China, right? Google, no, out of China. You have only India as your great white hope. Amazon, only India, no China. So you have been shut out of the biggest consumer market in the world. All the US tech companies, trade wars, all wars put together. You have only India to rely upon. India still at the end of the day is a tiny consuming market for the kind of pricing these guys want. So you're back with the US, and the US consumer is hurting. If you're earning $60,000 in the US, you are taking home nothing at all. So in the US, there is going to be a corporate profit slowdown. And I think in that scenario, there will be cutbacks on spending and doing whatever company, or maybe the pricing itself might suffer that these guys were offering to Indian IT companies. I don't know what plays out, but I think Indian IT companies may not be as happy looking forward than they were looking back.
Question, and we've had several interactions, and there are times when you've been very vocal and you've said, look, it's time to buy nothing, but it is also time to put your money in State Bank of India fixed deposit. Next 3 to 6 months, is one better off putting money in a fixed deposit rather than trying to chance your arm in the market? I mean, do you think as more risk will unfold, this market will get better entry points?
I mean, fixed deposit is good. I mean, as long as you don't go and pick Yes Bank and PNC Bank or whatever other banks that keep going bust, every once in a while. SBI is as good a bet. But I think this is a great market to be working hard and picking a portfolio of 10, 15, 20, 25 stocks. I mean, I think this is an absolute no-brainer of a market, and I would not be surprised. Like I told you, one stock which has gone 100%, which I was lucky enough to own in the last 4 months, and the worst carnage we have seen in 3 years. I think from now until the next 12 months' time, there are going to be at least 20, 25 good names that will be up between 25 to 100% from this point of this interview in the next 12 months' time. I mean, I would be very surprised if we don't get that kind of bottom-up stock picking, opportunities.
Okay, that's a rather positive note. Shankar, do you still hold Twitter?
No, I sold it back. I bought it when I sold, I think, at 48 or 49 or 50. And I don't think Elon Musk, with the sudden decline in his net worth, is interested in buying it anymore. I think he's looking for ways out, because a lot of us build a lot of castles or dreams based on our stock price values. But, stock price. Tesla was 1,300. Now it's closer to 600. Life changes dramatically. Trust me, when your stock halves. So I think he's looking for a decent, honorable way out. And he's asking about the bot data and all that, which is all nonsense anyway.
It is so strange. Shankar, really appreciate your time, and thank you once again for being part of Eating Our Family, and thank you for always coming at turning points to help viewers navigate the fall.
Thank you, guys. Bye.